Hello guys, welcome to the Trading Parrot. I'm going to do the market close update, and as you can see, the price of Bitcoin after the breakdown in here on the RSI 4-hour hasn't managed really to recover. Now at these hours, which is almost 9 p.m. in UK time, we can see that there is a little bit of a bounce in the momentum there, but not yet enough to say anything. We could be talking potentially on a revenge rally into the resistance of 59, which is the one that is in here, if we really get something bullish. And if we did that, let me tell you what is the target. That level of RSI 59 is located at the moment on the yellow line in here, which is 89k, give or take. So a revenge rally can get us still below 90k, and that is something that at the moment is concerning me about the progress in this area in here. Really what we need to do is to see an extreme move, not just of a revenge rally, but an actual breakout from here into the 65. And as you can see, that is already something challenging, but then we need a second layer of challenge if we really want to get into the top of the range. From this move in here with the rolling over, that is quite significant as a move to the upside. If we want to look into the downside, now we need to update this. I'm going to extend the support into an area more realistic in case we ended up doing a move like this from there. So realistically, if the RSI came down, it will meet with that line around the 32.43, and I need to update that. Let me do it as we speak. 32.43, that is the red line on the price, currently located at 83.3. So if we got that and we were to just stop there, that wouldn't be that bad actually, because that is still an order block that is bullish, that is still a volume profile hill that you can see in there. So if that holds the price at around 84.5, that potentially could bring still the price higher. But the bulls are really not gonna like that, because that means that the breakout from this resistance will be faking out. Picture the price like this. You get into that area there below that line, not that great. And that is also a double top, but is the actual target of the double top to get somewhere around 84.1. Now, if we were to hold this level that has been 1, 2, 3, 4, 5, 6 candles in the red, and we were to bounce from this volume profile that we can see in there, defending it is the right thing to do, by the way, don't get me wrong. And if we can do that and break those two challenges, number 1 and number 2, we can get over 90k. But it's getting like a big battle. We need to look into the order book to see how things are being defended. There are some anomalies that I want to share with you before we continue with the video. Guys, if you want to get a new exchange, Tubit is a great option. 2 minutes to get sign up. The link is in the description. It's non-KYC, $50 for free to start trading. Let's go into the next chart, which is the daily. Let me save this like that. On the daily, we're still right against resistance. So the daily doesn't look that much of a challenge compared to the 4-hour, but really to get beyond the 34.4 at the moment, we have to get the 4-hour to deal with those challenges. Indeed, the daily shows a PNR signal that we covered a couple of days ago that is bullish. We are getting close to a MACD bullish cross, and the histograms are coming into the pink, and possibly in a few days we could be crossing the zero line, and that will be magnificent. Remember that breaking out on the daily beyond the 34 is equivalent in terms of momentum as if we were breaking out from the top resistance of the falling wedge. So that is anticipating that if we got there, we could do it as well. It increases the chances for us to reclaim and potentially bullish breakout from that area. So let's go into the next of the chart, which is the CPR. The CPR at the moment is still in a rejection. The daily has been bought up. It pinched 86 during the day, and it hasn't hasn't managed to conquer the 88.2. For CPR, that is a big deal. We really need to do that. And if by the end of today we have somehow a miracle and we reconquer 88.4, that will be 3 green candles in a row. And if you pay attention, we haven't had such a thing since around 111. So all the range from 111 to 80K, a range of 30K, $1,000, and we still don't get a signal like that. I would love to have something like that, to be honest. On the weekly, still no news, no reversal, nothing changing, just crossing fingers for the weekend to get the stochastic RSI bullish cross here on the top. And I'm gonna skip this part. That is all cover. The SOPR, I cover it in the morning. You can watch that video. I'm intending to make this video shorter than the one in the morning. And let me get into, let's go into on-chain data. So now this is getting into 36.4, and the implications of that, of course, I cover it in the video in the morning, but we are in a sustained way liquidating longs for too long, and that is a symptom of beginning of bear market. Open interest, the oscillator is in an area calling for entering long for, let's say, third time in a row now. So all this range in here is giving us the permission to take a long. Now on-chain is where we are seeing the biggest things. First of all, we are seeing this one in here, which is the supply adjusted coin days destroyed, that has surpassed the 3 previous peaks, right? That is something significant. We are at 124 at the moment in the reading, and the maximum we have done is 118. Incredible that we are starting to get these readings with the price coming down. Usually we get higher highs of distribution as the price goes up, and that shows you that big holders, long-term holders, are potentially accelerating their distribution into short-term holders. At least that's what Bitcoin Magazine Pro charts are showing us. And let's see if I have a new reading. No, not yet. For the 25th on the spot ETF, we're still in extreme fear. And liquidation short-term, we got the 2 good candidates that we need to look. The 95K around the golden pocket from this bounce. Remember that we fell from 107.5 all the way to 80,000.5, and this has been the best bounce that we have so far, and it's still insignificant. We are very far still from 0.618 golden pocket. If we get there, we can start talking about bigger chances of a recovery going above 100K or anything. Anything that we do in here is still a bearish flag potential, and if this is a bearish flag, depending on how you measure it, it could lead us into something painful, like for example going into the $76,000, where we have also a liquidity pool and is reachable just by an extension of 1 on Fibonacci. So it's at the moment that is a risk. The risk is number 4. Of course, we just kill 1, 2, and 3. 4 and 5 are a risk, and we need to keep them in mind pretty much twice a day. We need to repeat ourselves. That is the risk. 117 is the biggest reward that we can see from the 3 months liquidity pools. And let's see if there's any change in here. Everything is becoming very homogeneous, very, distributed evenly from 84 all the way to 90. There's nothing that stands among the rest. And if we go into 97, 98, that's where we start getting that 8 billion liquidation on the past 30 days. That could be significant. And the order book is looking a lot shallower than we saw this morning. As you can see, there are no 1,000 levels holding the price. There's nothing 1,000 close proximity to the price. So where is the liquidity? It has been moved into 93, 95.5, close to 1,000 as well. And that's interesting. So this could be 2 things. Either they're expecting a move that high to reclaim 90 and they are defending that and thinking, well, that's a great area to short if these guys get lucky and price gets there. So someone is preparing for that. Or it could be just spoofing. Maybe there's not much going on at the moment. We still have the buying wall below the price that we detailed this morning in the video. Nothing changing in that end. Notice that the fair value gaps close proximity below the price are very thin. There's nothing really really attractive at the moment from point of view of fair value gaps, except if we go sub 76k. And I'm not able to show this, but you can watch the video in the morning if you want detail of where are those fair value gaps located. We can see in high block capital that there is some contention in here up until 20% deviation away from the price. Everything is in the green, not very substantial. And even if it was substantial, we already noticed that the volume in the order book was very thin. So when you see ratios are ratios. If they tell you a ratio of 1, you always have to wonder how much volume, because if there is no volume, this is very easy to manipulate. And as I'm speaking, the thing is flipping constantly. So they are constantly spoofing a couple of orders, and they are moving everything as I speak, which is just ridiculous, of course. Funding rates were in the negative this morning, and hopefully those funding rates are going to contribute to bring in additional shorts that is fuel for potential upside. The longs versus shorts climbed back above 72. That's another thing that is looking bullish after so many red candles. The longs stepping in over 70 in a bull market. If we are still in one, that tends to help the price to bounce back up. And we got plenty of longs now at risk of liquidation. That's 292,000 in the delta. You know, that is something bearish, guys, definitely, and we need to deal with that. Hopefully we get some narrative or something that moves the price. I think everybody is now expectating on what's going on with the rate cuts, whether they're going to stay with those elevated metrics that we saw this morning as well. We saw that over 80%. I don't know how much it is now. With an 82.7, so that probably is bringing in some hope in general markets. Price action, I'm not going to cover that. A fresh technical context, 2 days bounce into an 89, has stalled prior RSI and structural resistance. We know all of that. Let me see if anything has changed that is really important mentioning. Macro and cross market drivers. The Fed, yeah, we know all of that, so that's not new. This has supported a broad risk asset rebound. US equities just logged strong sessions. And on the S&P, things are looking great, but there is an ongoing rotation out of Nvidia. Majority into Google, but there's also some rotation into Microsoft. That is good and bad, because we don't want Nvidia to do a blow off top. We want some cool down in that sense in the AI bubble, so we can survive a little bit longer before it pops. So be careful what you wish for. Don't wish for all-time highs on Nvidia. At least that is my point of view. If we get now a look, I'm gonna have a look at Nvidia, definitely. I'm really tempted to do that. So on the daily, I want to show you the chart, how it looks. So we got that breakdown in here, and we have 2 green candles, but they still put in lower lows at 169. So in the target is 141. Let's see if we can get that technical target after such a massive parabolic move. Is very difficult to capture when that can happen. But if Nvidia takes this level there and is just holding on there, fine. But if it pops the bubble, if it does a 50% retracement on a 4 trillion market cap, that is not good. That's definitely gonna bring back up or signs of kind of recession, or the alarms, big alarms in terms of risk. The VIX is cooling down, but remember, it's cooling down, but it's cooling down at the cost of still putting higher highs and higher lows. This is still higher low relative to that. If we close the week like this still calls for expansion, despite the fact that this has cooled down massively from 28 all the way to 18, 10 points down. But Nasdaq bouncing from 21 weekly, S&P as well. All of that is definitely positive for continuing with the rally. Now, up until when? I don't know. Let me cover a little bit of the altcoins, because the breakout is the 3rd week that we are in the no-go area. This area in here is equivalent to this area beginning of bear market for the altcoins. Definitely not what I wanted to see today. But I hope, guys, you enjoy the video. If you do, hit the like, subscribe, and write down a comment down below, and you will see another video like this coming in tomorrow morning. See you. Bye-bye.